Hello, and welcome to episode 13 of the Realty Radio Show. Today I have a very special guest, Mr. Chris Kline. He is the COO and co-founder of Bitcoin IRA. We're going to be talking about cryptos, his general overview of the marketplace and what's going on, his future insights, and everything else. Enjoy, guys. All right, Chris Kline, thank you so much for joining us, my man. Pleasure to have you on. Very excited to dig into your brain and talk about the crypto space. But before that, who are you? Where did you grow up? What are your hobbies, man? Give us a little 411.
Absolutely. Hey, thanks for having me today. It's a pleasure to be here. So Chris Kline, born and raised in Colorado, on the Eastern Plains, or Aurora. I went to college in Boulder, Colorado. And then about 11, 12 years ago, I did a one-way ticket in a suitcase and started over something new, took a new adventure into California. Didn't even actually have a job at play or anything, just wanted to shake things up. And now I live here with my beautiful wife, Carla, and my 9, almost 10-year-old daughter, Isabella. Hobbies, I love to golf when I get time to. I'm not good at it at all. But most of the time, honestly, as an entrepreneur, that's my passion. My passion is creating new things and taking on new challenges and obviously finding success in business.
I see. So would you say you're more of an inventor or more of a business type person in terms of the entrepreneurial path?
More of a both, but started as an inventor. Love to solve problems. Oh, we need to do it this way. Let's figure out the ways to break that bound, reverse engineer it, and make it better. Once you start getting good at that, then you have to get better at the business part. So I think we're up to about 180 employees now. We've been acquiring some businesses this year, just learning a whole nother evolution, almost a doctorate in business as the years go by.
Yeah, I love that. The real world experience will teach you tenfold what any school or traditional institution will ever teach you. And what was it that made you, that spurred the thought or the emotion to pack the suitcase and move out west?
A lot of different things. A little personal side. My mom had passed from cancer. I was about 24, and I got married to my high school sweetheart, and it didn't work out. So, kind of sitting there with a college degree, post 2007 crash. Everything has just got a negative connotation to it. I think I was bartending at the time, just like not really driven to go and change the world or do something. And I felt like a new location would have been best. And I literally threw darts at a dartboard and visited New York, San Francisco, and Los Angeles to make the decision. And I was actually going to end up in San Francisco, I thought, but just went with it. And I remember I was at my dad's place the day before I left. And it was around this time of the year, actually. It was New Year's because I spent New Year's with some friends in California. And I had 2 suitcases. And I went, well, this is going to be a nightmare. And I just cut half of my stuff in half right there the night before and went with it. I said, Dad, if I need these things, you can ship them to me. Because I just wanted to be agile. I really didn't know what I wanted to do next.
I love that. Yeah, that's I love that. And it creates a different. It's like an invigorating, motion when you start fresh and start something like that. So amazing. So Bitcoin IRA, you co-founded that. You're currently the COO. Tell us a little bit about the platform, what it is. Do you guys have any competitors in the marketplace? And what's going on with that entire initiative? It seems like you really grew it over the last 8 years,
7 years, 8 years. I think
7 years.
we're coming up on 8 years. Yeah. So when I landed, obviously, I serendipitously was out with friends for New Year's and ran into my now business partners at breakfast the next day. We were just talking, and I said I was leaving for San Francisco in a couple of days. They said, hey, called me about an hour later, and they're like, hey, man, don't go anywhere. Come into the offices. Let's talk about some things. And they were working in the self-directed IRA investment space. So real estate, private equity, precious metals, a gauntlet of things that you don't normally find in traditional retirement vehicles.
Sure.
And they saw an opportunity because it was somewhat of an archaic industry. There wasn't a lot of online digital advertising happening. There wasn't a lot of online platforms that people made this easy. Fidelity's easy. It's click, click, invest.
Sure.
And this industry niche didn't have that. So we got really good for a few years at building platforms that could onboard a person, make it easy to open, fund, and then inevitably invest a self-directed IRA account. And it came across our desk. Somebody had said, kind of a challenge, do you think you could ever do Bitcoin in these things? And this was 2015. And I went,
Okay.
what? What's Bitcoin? And that's when you go, everybody will have their down the rabbit hole moment, or that red pill moment where they start learning about what Bitcoin is and
Yes.
what it really makes it different than traditional finance. And I got really excited and said, guys, I think we can do this. It took a lot of moving parts because it'd never been done before. And we brought it to market about a year later. The first client was Ed Moy, the former director of the United States Mint. So arguably the guy that produced the
Wow.
most amount of U.S. currency at a given time became the guy to be the first to have Bitcoin in his retirement account. And in those 8 years since, it is morphed and scaled into this ecosystem of a platform that folks can get online anytime they want to. I remember when we first started it, we were doing old school like phone trades. Somebody would call in, and that first run with the phones, we didn't even do a Christmas party because we couldn't get all the trades in. The market was moving so much. And I went to bed on New Year's Eve that night and said, hey guys, we got to build a 24/7 trader. We left a lot of money on the table. A lot of clients didn't get to do what they wanted to do. We got to make this a priority. And so we started building that. And if you are familiar with crypto history, about 4 months after crypto went into one of its winners, it always has these runs and then goes in these winners. And that was our first as a business. And it took a lot to get through that because you've got a lot of employees. You're trying to grow, you're trying to develop your business, but the market is just turning against you at every direction. Every day is bad news. But we made it, we survived, and got it to the next run where we grew on our own vertically integrated trust company. So we really wanted to do this as a full package. We brought our newest partner, Teresa Fetty, out of retirement. She had built and sold one of the largest self-directed IRA companies in the country. Still, I think like the third largest exit ever in the industry. And so we begged her to come out of retirement. We call her the godfather of the industry. And she helped put together this vertically integrated component. So now you're sitting in a regulated entity behind military grade security and insurance, and you're having access to 65 different cryptocurrencies real time, whenever you want, 24/7, Christmas, New Year's, your birthday, Jesus' birthday, whenever. And it's really, I think we're at about $3 or $4 billion of assets under custody, about to
Wow.
be 10 million with a big acquisition we're just finishing up. And it's so exciting. Every day's new challenges, every day's new growth. We're really trying to maximize that funnel experience for folks these days, is that seamless boom, boom, boom. Because it's not easy to move money between banks. It's a very difficult process. Banks love to take your money. They hate to give it up. And so we have to build systems around moving those funds as efficiently as possible for folks. That's really, I think, where we're going to get great at this in 24.
I love it. Wow, that was a lot. So essentially, in a nutshell, you guys provide a platform for folks, regular everyday folks, to be able to diversify their retirement savings portfolio. Is that kind of, am I hitting it?
Yep. Yep.
I love it. And you guys have 65, you said, different cryptos on the platform?
Yeah, we started with Bitcoin, and then in 2017 we launched Ethereum. Later that year we launched Ripple, Litecoin. There's actually this great video of my daughter. My dad got these little commemorative coins for me, and there's Bitcoin, Ethereum, Ripple, and Litecoin. And she was 4. So I taught her one-word associations with each coin, and she would walk around the office with them. And the marketing person saw it and went, we should make a video of this.
Yes.
And so I used it for when I would go do presentations and things. And her words were, she said, Bitcoin is money, Ethereum is contracts, Ripple is banks, and Litecoin is for shopping. That was her favorite one. So, and
That's
then about, I think 2021, we launched 65 additional, or 60 more additional. It's a process really of just deciding, can we keep the coin safe and can it be readily accessible for clients? There are thousands of cryptos out there, but when you get down and down and down that coin market cap list, you start getting into illiquidity, things that might be locked up for a long time, things that may not have a utility or a purpose. And so we try to keep it in the top 100 the best we can. But there's always exciting new projects that our clients are coming to us saying, hey, it'd be really awesome if we could add this token or this coin into the ecosystem.
Wow. You guys are doing a lot. And I know there are other platforms as well that kind of have these similar structure, but with other assets such as gold, precious metals, things of that nature. So it's really fascinating and exciting for you guys to be doing this, because we're entering into an age where it's not just the U.S. dollar as the primary form of capital. So it's super exciting. you guys have a lot of cryptos on there, so I love your daughter's explanation of the four main ones.
Yep.
I'm definitely ripping that off because I think that demonstrates each coin and each crypto um, uh, very well,
Yep.
frankly.
And for your audience, I'm sure some of them, there may be a handful that have done crypto, and there may be many that have never looked at it or just thought, oh, they get the bad news headlines, so they just dismiss it. There's two really exciting things happening for Bitcoin in particular this year in the first 5 months of this year coming up. First, they'll likely sometime in mid to late January, the spot Bitcoin ETFs will start to be approved by the SEC. And what that means is just a influx of mass adoption capacity. So for certain accounts like those with BlackRock and otherwise, you won't see it in the basic 401k yet, but you'll see it in some more advanced products on Fidelity and Charles Schwab, where they can just get access and exposure to crypto through a spot ETF mechanism, which is an exchange traded fund that invests in the underlying asset. It's like a proxy certificate. You're almost buying a share of it. Not exactly the same as what we do, where you're buying the real thing and storing it in a wallet and keeping it long term.
Sure.
But it opens up that exposure. And all these institutions, there's 9 of them that are going to be offering these things, have to have a balance sheet of crypto before they can actually offer the asset, because it has to represent an underlying asset. So you're going to see, and you're already seeing it over the last few months, crypto's gone from what's almost up 56% this year, I think, since about March. It was at lows at the 20s, and now we're at 45,000. So
Yeah.
you're already seeing that quietly happening, and you'll see a larger influx as the demand builds in. But that's only one piece, and we've waited a long time. There's been talk about Bitcoin ETFs for 7 years now, as long as I've been in the game. The
Sure.
second, and I call it the granddaddy, is the halving event that will take place in mid-April. And if for those not familiar, Bitcoin has a series of halvings. There'll be 21 million ever made. And as we got halfway there, so when the 11 millionth one was made, there was a halving event. The reward for mining Bitcoin, like the reward for guys that go and mine gold, right? They actually get the gold and then they go sell it on the market.
Sure.
The reward you get from the protocol it used to be an actual whole Bitcoin. And then it got halved. So it was a half a Bitcoin. And then it got halved again. So it was a quarter of a Bitcoin and then an eighth of a Bitcoin. It will be this newest one. So unlike US dollars, where we reward people for printing more money via re-election, basically. They print money, they put stimulus checks out there, and they get reelected. Because if the economy is good, people vote with their pocketbook in this country. And as long as people feel comfortable, then you have a better chance of re-election. So we're rewarding that behavior, which is actually very counterintuitive and somewhat self-destructive, because we're creating more and more of this, which lowers the value of it. It's not a finite asset. It's infinite. They can print as much as they want to.
Sure.
In the crypto space, the system itself, the protocol itself actually punishes the producers, cutting in half their reward while making it more difficult to create the Bitcoin and basically creating a diminishing rate of return. That's why there'll only be 21 million. And that's the piece that gets me as amped as possible about crypto, because it is something that is in stark contrast to traditional finance today. And let's be honest with each other. I don't think we talk about soft landing and inflation and the rates, and there's so much you could go in there, but things aren't getting cheaper. And they're definitely going up higher than 3 or 4 or 5% a year, because the things that really impact us, pieces of the groceries, the fuel bill, the utility bill, college education costs, vehicle costs, these are things that aren't necessarily included in all the indexes that look at inflation. Most Americans will tell you things feel like they're 10 to 15% more expensive than they were last year, not 3 or 4% more expensive. And what better way to store some value, like folks that look at gold and silver, in a digital sense with cryptocurrency?
I love it. And it just goes back to how many currency units are floating around in the economy. And no matter how many different levers, they can pull at the federal level, um, the bottom line is they're printing more of this stuff every day, as
Yep.
opposed to a Bitcoin. There's a finite amount of it. Now, maybe let's get down into the rabbit hole a little bit. I know that there's going to be, so 21 million is all they're going to make. Who made that rule, and who's to say that they won't make 30 million or 40 million, or kind of turn around like the Federal Reserve has and just let's print some more? Where's
Well,
that regulation or that guideline?
it's inside the protocol again, which is kind of nice. Decentralized currency has a rule set everyone follows. And the way that it becomes more difficult is you're taking the reward away. So you're going to get down to a 16th, a 32nd, a 64th, all the way down to a 1 millionth of a crypto but you're going to have to spend the most amount of energy possible to earn that reward, because it's all about solving difficult algorithmic equations, and you need CPU to do that. And the first Bitcoin you could mine on like a laptop. Now you see these rooms of ant miners, these giant rooms of machines. Those things don't run off of one millionth of a Bitcoin of energy. So the cost benefit analysis of it, there's a point where production will just cease, is how the protocol is designed. We may not even get to 21 million because it may become prohibitive at some point,
I see.
because of the amount of energy and the difficulty of solving to earn the reward. Now, there's other ways that miners earn rewards than just production on the protocol in the next block. They're also validating transactions through nodes. They're working in Lightning networks. So there's this whole ecosystem around what these guys do to keep the protocol locked in, and it's consensus driven. So if you have to get over 80% of folks that are on all these nodes to agree and flip protocols or do something different. It's not a group of dudes sitting at the Federal Reserve just making a decision that they want to print more money. So it's nothing's perfect in this world.
Sure.
A lot of people also make the mistake of thinking that Ethereum is similar, or some of these other coins are similar. Litecoin, for example, there's 4 times as many Bitcoin that'll be produced as Litecoin. So take 21 million times 4, there'll be that many. Ethereum doesn't really have a finite capacity to it because it doesn't want to. It's designed to be the backbone of Web 4, Web 5, what's coming next in technology and the way that we use browsers. I mean, at least you and I, we started with the AOL and the chat rooms and the You Got Mail. That was Web 1. Our grandparents, some of them are still there. And now we're to what you can do on these mobile devices, and this access to connectivity that we have everywhere. The next evolution will include more AI, more blockchain, more elements that Ethereum hopes to be the backbone. And a lot of projects today are being built on that protocol and that infrastructure. So that's more, if you could buy shares of the internet back in the 90s, could be what it's like to have Ethereum in your portfolio in the future.
I love that. And that totally makes sense. And I love how you're unpacking all of this, because I think it's bringing a lot of clarity to a lot of people, including myself, because this is an entirely new thing.
Yep.
And whenever something new comes to the marketplace, I think there's a lot of fear surrounding it, and there's a lot of resistance to adopt it. Yes. So touching more on Ethereum, and I think there's a lot of, so as you mentioned, it's more of a contract type of coin, right? So I think there's a lot of applications, and this has come up in topics on the real estate side of things, where we might be implementing it into title work and all of that, and providing a extra level of security. And not only that, but just making everything easier for the consumer and more cost effective rather than cost prohibitive.
And protects a lot of, there's the contract, and then there's the information that's held in records after the contract that's at risk too. And so, yeah, you're right. Title insurance, this title fraud, you see that. I think there's infomercials about it now. It's like right after LifeLock, there's title fraud and those things. And so those things would go away if you used a protocol where the terms of a contract are put in place between the two parties and only released once the two parties introduce their private keys to validate that. And you could validate anything, right? You could validate an escrow transaction. You could validate a full business acquisition through these things. And then all the data that's stored, once it's locked up in that contract, the data is given back to the original user and not out at some public records place that we see these all the time where they have to tell us that Visa got hacked or this group got hacked because it's a disclosure to us. And all of our personal information is everywhere nowadays, right?
Yeah.
So that's a big piece of the Ethereum component that you'll see. But that's going to take adoption. And you got some pretty old school brains, especially in real estate, right? There's the old boys network that's been doing it this way for years. They've been disrupted in the realtor space for sure via social media and the way that people are marketing and selling homes. But the transaction and the operation of that sell or buy hasn't really caught up to the times yet. But that could be something you see that happens here in the next year or so.
Yeah, well, and especially in the financial markets too, you have the good old boys that have no idea what's going on in this space and refuse to kind of accept it as the future. You mentioned Web 4, 4.0, 5.0. I was thinking we're still kind of on the cusp of 3.0.
Yeah.
Would that be fair to say? I mean,
yeah, we definitely are.
Okay.
I just get excited about what happens next. That's all.
Yes. No, me too.
And I got a little girl that's 9 years old, and I watch what she does with these games on her iPad and Like they're going to move at a whole nother level than we do. We were thumbs on Nintendo games, and they're
Yeah.
inside these devices learning, and they're going to build amazing things. Actually, it was really cool. Izzy came to me and she goes, because I told her this time last year, it's her birthday, we always set goals. And she goes, Dad, I'd like to start building out like a portfolio of assets, kind of because I talk about this stuff all the time. And I said, well, what are you into? And she goes, well, I love games on my iPad. And I said, okay, go figure out who makes those games or who owns the companies that make those games. And she came back with this list, opened up the apps, looked them up and everything. And so we went and found shares of the parent company is Zynga, and the group that has the most of them, the guys that made Farmville a long time ago, was a big owner of a lot of these things. And so, and she checks in on her stocks. She goes in there and she looks them up on her phone and she goes, Dad, it's doing good today. So, you know, they're thinking about things at a whole nother level much faster. When I was 9 years old, I wasn't thinking about any of that stuff. I was just getting through fourth grade, man.
Yeah, no, and technology and the acceleration of this has just been exponential over the last, I think, 15 years or so. I mean, I joke around with my buddies. I'm 33. I think you got a couple of years on me, but I joke around with my buddies and say that we were kind of the last generation to drink out of the hose and, you know, come in when the
Yep.
street lights came on. Because you drive through some of these neighborhoods now where you have, you know, 9, 10, 11, 12-year-olds, nobody's outside playing. Everybody's inside on their mobile devices, on their iPads, and you know,
Yep.
all of that. So,
Well, they tried the metaverse in 21. It was the buzzword, right? It
yeah.
will come back. Fortnite itself, Roblox, these places where people are going to interact with each other in
Hmm.
these games, it will continue to grow. I
Sure.
hope that they still keep some of the outside activity. You know, we force Izzy
Yeah.
to go outside, but I think that's also coupled with the world's not the same, man. Our parents,
Sure.
there was my buddy always jokes. There was actually a commercial at 9 o'clock that came on so that your parents would see it and say, "It's 9 o'clock. Do you know where your children are?" Because it was different. They didn't, as long as we came home and they didn't bother what we were doing. My friends and I went on our bikes and explored the whole city, and
Yeah.
as long as we were home by 9, everything was fine. Nowadays, in this world, unfortunately, I can't do that with Isabella. I can't keep her. I can't let her go out on her own because it's not a safe world. It's just not what it was when we were kids.
Yeah, it's a completely different world. And as Gary Vaynerchuk says, I mean, as scary as it is, and in some, you know, ways, it's unfortunate. There's no stopping it.
Yep.
It's only going to accelerate, and it's going to exponentially accelerate as we, you know, keep moving through it and adopting these new technologies, and as tech gets better. I mean, we're walking around with NASA level computers these days that they had in, you know, in the 80s or whatever it was. It's absolutely insane to wrap your head around it. And the what you were talking about, the with your daughter, and with like the video games and that, and owning a piece of that, would that correlate maybe to NFTs in that space? What's your knowledge on NFTs and all
Yeah,
of
that's
that?
kind of
Because
the intent is, there's this certification of something. So NFTs I mean, they're more than just pictures of monkeys for those that think that's, or JPEGs.
yeah,
Their real design is to be that digital certificate of authenticity that can't be duplicated and muted or destroyed. I've seen folks that have been in the industry of sports collectibles starting to use them, or they get that particular card or whatever it might be to avoid for fraud or fakes. The phonies that are out there that get made.
sure,
Autographs is another thing. People will start NFTing themselves at some point. Celebrities will start doing it, and it'll be a way for them to protect their likeness. It's starting more now with AI, because people are doing deep fakes, and they
yeah,
can create a version of me or you. They won't, because they don't care about us, but they're going to make a version of The Rock to say things online or whatever.
yeah,
Uh, so that space will have a very strong future. It was a victim of the crypto market fall off. Like, it just got so crazy in 21. Some of
yeah,
these things were going for 21 because they were brand new, and there's this hype cycle that happens. But what'll happen is it'll clear out a lot of the riffraff in that segment of the industry. And what will come in the next evolution of it will be something that is very viable and very needed. We just, like the metaverse, it takes time for it. We can build stuff fast, but to get people used to stuff and how things are supposed to work, that takes a little bit more time. I saw this video of folks at a Burger King in the 1980s using credit cards for the first time, and they were interviewing people. What do you think of this? And several of them were like, I just think it's silly. Cold hard cash, that's all you need. I always
Yeah.
have it. This is And fast forward to today, and you don't even have people with cash. I had to tip a valet the other day, and I didn't have any cash. And I'm like, oh, and he's like, don't worry. Shows me a little QR, and I can Venmo him. Like, that's where we've gotten to.
Yeah.
And so, yeah, it takes a little bit more time, and there's a little lag between creation and adoption. But NFTs are a really exciting space too. There's a couple other projects out there, coins that have been doing really well towards the end of this year. Solana has a lot of buzz around it. It had some rough parts of its protocol and components last year, so to watch it recover from that. Also, Chainlink, which is there's all these different types of blockchains that are being built, right, for different protocols.
Sure.
This is a tool that connects them. So think of like that box at the end of the street that's connecting all the houses and the phones and all those types of things. That's really what Chainlink is. So those two are really exciting that you see. You don't have to get super fancy to get exposure into crypto, is what I tell most folks. You know, if this is your first run around the track, simple Bitcoin, some Ethereum, go to Coinbase, look up a couple of other coins that you want to track and things like that. But do your research. There's two or three word things I always say. Do your research, whatever you're getting into, and then dollar cost average. There's such a motion in crypto because it swings so much and there's dips and these things. And
Yes.
if you jump in with both feet on one day and one trade, probably going to be kicking yourself because this market's always moving. And if you just set a set of rules, I'm gonna do $10,000 across $500 increments across 60 days, and you just set it and put it in a calendar and follow the calendar. You can even set those conditional trades up in most platforms. Then you're onboarded, you're in, and you don't have to worry about, oh, I bought it all of it at 55,000 and now it's at 44,000. You can average out that entry play, and when you sell it, people say to dollar cost average your way out of an investment as well. It just takes the emotion out of it, where you have to make this huge decision that I'm exiting this moment. It's just you do it in bite-sized segments.
Well, and it goes back to the fundamentals of investing in anything.
Yep.
You know, I mean, you can't
It really
expect to
does.
make, 500% returns overnight. And I think that a lot of the people, investors, quote unquote, in the crypto space, see it that way. They
Yeah.
go after some of these meme coins, they pump them, they dump them.
Yeah.
I mean, I bought Dogecoin. I bought like $15 worth of it, and I got like 2 grand out of it.
So
That
last
doesn't
year,
happen.
in 21, funny story. I've done about like 500 interviews of this nature, or like CNBC or others. And
Sure.
in 21, when the meme craziness was happening, I was out there. We were pitching to have conversations about halving coming up, what an ETF breakdown is, what's happening with like these really substantial conversations we could have had. And all I could get the reporters to pick up was, well, let's talk about Shiba, or tell me about Doge. And I'm like, oh.
Oh,
Like
man.
I told my guy that I work with on the things, it's like, dude, I don't want to do any more of these. He goes,
Yeah.
dude, you have to. It's what they want to talk about. And that's what happens is you see that there's a mania that kicks in around things. You don't want to be the guy running. It's just like, you know what Black Friday used to be. People run and they'll trample over each other. And then once the hype is over, there's really nothing left to it. And so it's always best to try to avoid some of that like just hyperbolic hype that takes place sometimes.
Yeah, 100%. Let's dive into just the idea of money.
Okay.
I know that the crypto space is so much more than just currency units at face value. Like we talked about, smart contracts, validation, all of that. Are you aware of the CBDC initiative and everything that's going on kind of on the top end,
Yep.
and how they're going to try to, God knows how, roll over this debt and kind of enter into this new era of the dollar?
Yep.
Because something has to be done. I mean, you have a lot of these nations around the world that are forming their initiatives. The BRICS nations, they've already come out. They're saying that they're planning on creating a form of currency that is backed by gold. So they've been buying up gold like crazy. They've been dumping U.S. Treasuries over the last 5 to 10 years like crazy.
Yep.
And so it begs to question, what is our government? What's their approach to this? Because they can't, and this is why I love cryptos and the crypto space and gold and precious metals, is because they can't put their fingers on it. They
Yep.
can't control it. They can't regulate it. It's just it's what money is meant to be, and that's just free. It's a free
Yeah.
currency unit that can't be manipulated. So what's your take on the CBDC stuff? What do
Yeah.
you know about it? What are your thoughts on it?
I think it's important to go back about 100 years first, just to understand how we got here too.
Hmm.
So if you go back to just turn of the 19th century, what really money was, and my buddy Jake got me actually a dollar bill from 1917 for Christmas. Pretty
That's
cool little
awesome.
gift. But this was exchangeable for a dollar's worth of silver back then. You could go
Yeah.
to the bank and say, "Give me the silver coin," and they call it the $20 St. Gaudens gold coin, which was around at the same time. You could bring $20 in and get a $20 St. Gaudens. They were interchangeable with each other. And
Yes.
then when the Depression hit, uh, Roosevelt basically had to finance his program, the New Deal. And in order to do that, they confiscated all the gold holdings in America. But it wasn't like the America we know today, where if somebody tried to come take their gold, they're going to have to take it from my dead cold hands. Like it was a different time. It was the greatest generation, as they call themselves before the boomers. There was just a different world, and it was a depression. So people were willing to do whatever to help lift the country out of this. So they went to the bank and they gave all their gold to the bank, and they got it back $20 or $30 or whatever it was. And once the Executive Order Act was completed, the next day they just raised the price of gold. They just doubled it. They just said,
Yeah.
okay, now gold's worth this much. And that's how they financed the New Deal. And then you saw silver was still being used in coinage up until about the 1960, 64, the silver dollars and things like that. And in 1970, at this point now, you could still, even though you couldn't go to the bank and exchange your dollars for gold and silver, international payments were seen as dollar is backed 1-to-1 by gold. So
Yes.
this put a ceiling on the growth of our economy. And we're going through the 70s with Richard Nixon, 1971. We go through the Nixon shock, where he just one day woke up and announced to the world that there is no 1-to-1 ratio anymore. The dollar is no longer tied directly to our holdings of gold, which partially drove us into what was after 70s into OPEC. And now basically dollars are the reserve currency for oil transactions, which makes them run supreme. You can't buy oil in this world without using dollars. So you got to take your yen or your yuan or your ruble or whatever, put it into dollars, and then buy oil with those dollars. Well, that puts a lot of good demand pressure on dollar need. But the rest of the world's kind of getting tired of this. That's
Yeah.
where we're at today. And that's why you have BRICS, which is Brazil, Russia, India, China, and is it South Africa? I can't remember what the S is.
South America, maybe.
Maybe all of South, maybe a
Yeah.
big chunk of South America, a conglomerate of them that are saying, the dollar, you guys are just printing it like crazy. And it's fueled by this military industrial complex where that's basically how the whole game works.
Right.
And there's a new evolution coming, and the Chinese, which is probably our biggest competitor for the rest of my life and most likely my daughter's life,
Sure.
have already created their digital yuan. And they're actually, they banned crypto from their people, but they didn't ban it from themselves. Just kind of like the United States, what they did here to attempt to regulate was businesses like mine in 2018, upstanding, legitimate, do everything by the book, regulated by banks. Because the word Bitcoin was in my name, I couldn't get a bank account open. I couldn't advertise on Google, Facebook, any of those places. And even today, LinkedIn won't allow cryptocurrency investments based upon this same compliance rule that they had. So
Really?
there's this pressure from all kinds of places, and you have major institutions like JP Morgan, et cetera, BlackRock, they'll go out publicly bashing Bitcoin, but behind the scenes, they're buying it up like crazy.
Yeah.
And so this great storm is happening, and what the US is going to have to do with its dollar, it's going to have to digitize its dollar because they want to track the usage. They want to get rid of counterfeits and fraudulence. But rest assured, it's nothing like Bitcoin. There's still going to be a group called the Federal Reserve that's going to get together in banks in New York and DC and Philly and say, okay, we're going to create or issue this many tokens that are dollars, basically. And they won't be printed dollars like that one. They'll be just digital zeros and ones. And they'll control that supply, and they'll contract that supply and the same way they're doing things now, not like Bitcoin where it's consensus driven. Protocol changes are made at a consensus level, and everything is transparent on an immutable distributed ledger. A whole different ball game. I remember when they first started talking about it, and I was doing interviews. I said, "Are they going to open the books? Are they going to really show us how much is being produced and where it's being put and what it's being used?" Because that would mean they'd have to open the books to what we do with all the spending in our country. Where do all those tax dollars go? And that's just unlikely in this existing political environment. Now, not to get political, but money and politics, they live together, right? It's about around power. I think we're going to have a big change in the way that we think about our our country's government and our leadership. I think our generation is going to grow into that now. We're starting to get to where instead of just, when we were in college, whatever, we were all liberals in college. Almost everybody was a liberal in college, right? We're starting to ask questions. There's this big gap of people that are 80 years old in Congress that have been there for 30 years that are out of touch with our generation and what we care about as a society. And there's a lot of division, and I hope we're going to make a turn. That'll change the way that the American economy can look, and it already does. I mean, you have so many less people doing trades and more people doing influencer and those types of things. You have 6 million realtors, I think. I don't know how many. It was a lot, right? It was a
There's
lot of
too
realtors
many,
out there.
man. I
Too
know
many
a lot of them
realtors.
dropped off this last
And
year, but
yes,
yeah.
definitely this most recent cold market definitely cooled some of them off and got them out of the marketplace. It's a survival game of being able to be not just a piece of something, be great at whatever you do. That's really what this economy is headed towards. And there will be a money that drives that. And will it be I think it's a basket of currencies. I think all these currencies are going to be competitive to each other. They're going to float relative to one another. And the US is no longer going to have this OPEC standard of the reserve currency of oil is dollars. Now they're going to have to compete, which means it's going to matter how much is out there, what's it backed by, how's it controlled, what's the ledger on it, so that people can see these things and decide where they want to park their funds, and then what are they used for. You already saw early in 20 and in 21, people were doing real estate transactions with their crypto, or a lot of guys were taking their crypto and collateralizing it for a note on a house. And companies are getting better at that because a lot of folks don't want to sell off these. They don't want to sell their bars of gold. They don't want to sell their Bitcoins. They want to hold on to these things and leverage them to get the dirty dollar and use it to get the transactions that they need right now. So more revolutions to come. And one of the things I always tell folks is there's a couple of good books. One came out, The Power of Money, this last year. And there's a few that I've read, like Pieces of Eight, that really dive into what money is all about. Do yourself a favor, and beyond just listen to two guys like us talk about it, grab a book or get a podcast, get one of those digital or video audio books that you can listen to in the drive to and from work or school, and learn about money, because it's going to be one of those things you need to know about in the future, just like a basic standard of living concept that you'll have to have in your life.
Yeah, it's Audible is a great app to have, and I use that, and I substitute listening to my gangster hip hop rap driving around with an Audible.
It just depends what mood you're in that day, right?
Yeah, exactly. And I haven't totally cut it out. Let's be real, right? But if you factor in how much music you listen to and substitute that with educational material, another great book, I'm just wrapping it up, is Ray Dalio's book. I think he came out with it 2 years ago. It's maybe been now. It was kind of at the tail end of the pandemic. It was The Changing World Order, and he looks directly at productivity of economies, rising world powers, dominant world powers being challenged by other emerging economies, and he speaks specifically to China and what they're doing over there. Another
Robert Barnett, I think, has the Pentagon's new map. It was written after 9/11 of what is the layout, what's our map look like if we're playing that game of Risk. And he talked a lot about economies, and I think he actually came out with another version called the Pentagon's newest map.
Okay,
but those are good ones. Those are really good reads as well.
And who was the author on that?
Robert Barnett, I think.
Okay.
I read it in college, so I'm pulling deep. into those years right now.
Yeah. There's another good one, since we're on the book topic, and this guy actually lives in Colorado, Peter Zeihan, and I think the book is called "The End of the World is Just the Beginning," and he dives really deep into more so like data and demographics of different countries, and his thesis is that China is not in good shape for the next couple of decades due to their population problems. And their reproduction and all of that. So that's another good one.
They also make mistakes like we do too. We build bridges to nowhere, right? And the infrastructure, there's a lot of corruption over there. So they have these whole cities that have been built that are ghost towns because nobody can afford to live there. And because there was so much corruption, or they built the damn thing 20 miles from where the factories are at, and nobody wants to get cars and drive there. They're going to stay. They'd rather live in less, I guess, like we're Americans, we like to spread out, right? And then that's the way we've done things. They're doing it differently. So they're challenging to keep up. They're also in I'll call it, I think it's a 20th century political regime. I think that communism had its day, and I don't think it has really gone much further than where it was at. It has its imperfections because centralization of power is dangerous. And that's why I love decentralized money like
Yeah.
Bitcoin, because it decentralizes that power of money, which is really popular. I'm going to check out that End of the World is the Beginning.
Yeah.
I haven't
No,
read that.
please do. It is fairly new too. I want to say within the last couple of years.
Awesome.
Very fascinating read. But yeah, he's actually in Colorado. I think he lives in Evergreen or something like that.
Nice.
But super smart guy. CBDCs, in my opinion, subjective opinion, are a tyrant's wet dream.
That's
Um,
what I like that. I'm going to steal that one. I'm going to steal that one, Billy.
please do, because I think it's, and again, nothing's perfect, but it really gives the feds and the central governments, central planners, the capability to really fine tune economies and funnel capital where they see fit,
Yeah.
which I'm a fan of true free markets
Yeah.
and less manipulation. And I think that's what's going on right now and what has been going on over the last couple of decades. And that's why we see these big booms and then these big busts,
Yeah.
like the, '08 financial crisis and all of that. Um, Chris, if you could go back, man, 15 years, 20 years, whatever that number is in your mind, and give your younger self some advice, would you have any advice to give yourself, knowing everything that you know now?
Other than buy Bitcoin back in 2009 when it was pennies and
Yeah.
hold it and just never look at it, that would probably been the best advice. But that's just too much of a plug. I would say for me that there's an importance to emotional EQ and leadership and growth, not just in leadership as a businessman, but as a family man, amongst friends, as mentors for younger guys. Like I was telling one of my friends this weekend that, for me, it was always about I want to be the best in the room, the smartest in the room, the richest in the room, the fastest in the room, whatever it was. And over the last couple of years, I think as part of just getting aged, is you're really measured, your legacy is not measured at the trophies you win. It's the trophies the people around you win because you've brought them to a different level. You've made them better by being a part of your life. And I would have focused on that earlier because I think I would have built a hell of a group of people around me. And actually, in our mastermind that we're in together, Richard, I'm working
Yeah.
on my pyramid, and I have a really messed up pyramid. And it's because I've always been hyper focused on growth and money and success and wealth and development of business. I guess I'm getting close to that halfway point where you realize you're not counting the years up, you're counting the years down. And so I would have probably slowed down a little bit as a kid. I want to slow down a little bit and just enjoyed it. I was a perfectionist. I used to have sleepless Sunday nights when I was in fifth grade because they couldn't get a B, and I didn't get a B from when they started giving us grades all the way until high school graduation. I was perfect. And I did it again in college, and then got into business, and I had this perfectionist mentality. And that is an illusion. There's no such thing. So I would shake myself if I was one of those ghosts of Christmas past to go back and say, bro, don't worry. Perfection is unattainable. You're good.
Yeah, and Gary Vaynerchuk is a guy that I follow, and I love his content and everything that he puts out. But he does this cool stuff. Like the other day, he bought out like a construction street sign in New York, and it said, "The bigger the vision, the slower you need to go." And his
Yeah.
whole mantra is patience. Nothing happens overnight. But man, do I wish I would have bought some Bitcoin in '09. I actually had a buddy in college. He was the first one. His name was Arthur. He was the first one that mentioned it to me. And he's like, "Man, this Bitcoin stuff, it's going like it's the new thing." And I'm 21, 22 years old. I got my my stipend check from my student loans and went out and got an exhaust for my Jeep. If I, but like
You probably don't
it,
even own that Jeep anymore, do you?
no, I blew it up doing a river crossing. I sucked up water through the intake and blew a piston out of the block. So that
Wow.
Jeep is long gone. The Bitcoin wouldn't have been so long gone if I would have spent $700 on it back then. I don't even want to know what it would be worth today. It was,
Yeah.
I think it was like a 30th of a penny at
Yeah.
that point in
Probably.
time.
Yeah.
So man, you can only I wish, right? But Chris, it was super nice to have you on, brother. Thank you so much for your time. Unless you have anything else to share with our audience, I think you've shared so much insightful information. It was truly a pleasure diving into your brain, and hope to have you on again soon. And other than
Absolutely,
that,
buddy. It's been great. And I hope you have a wonderful new year. 2024 is going to be a landmark year for crypto. So your audience will love you for having had this conversation before the year kicks off.
I love it. Chris, thanks again. You have yourself a wonderful new year as well, and we'll talk to you soon. And that's a wrap on another episode of the Realty Radio Show. Thank you for tuning in and indulging in these honest and thought-provoking conversations. If you enjoyed today's episode, be sure to subscribe, like, and leave a comment on your favorite platform. Remember, the Realty keeps flowing on our favorite social media channels, so connect with us on TikTok, Instagram, Facebook, and LinkedIn. Until next time, keep steeping in truth, growing with purpose, and embracing the authentic flavors of life. This is Rich signing off. Stay brewed.